Welcome to the Bay Area Real Estate Podcast. I'm your host, Harvinder Balu, with Realty Experts in Fremont, here to provide you with the real insights, trends, and solution for the Bay Area real estate market. From market updates to expert tips for buyers and sellers, we got you covered. Whether you are in Milpitas, Fremont, San Jose, or anywhere nearby, this podcast is your go-to resource for making smart and informed real estate decisions. Let's make your real estate journey smooth and successful together. For more information, visit my website at REALTORHarvinder.com. All right, now let's dive into today's episode. Today we're diving into the latest Federal Reserve decision and its implications for the real estate market, particularly here in the Bay Area. On December 18th, 2024, the Fed announced a 0.25% cut to the federal funds rate, bringing it to a range of 4.25% to 4.5%. This marks the third rate cut this year as the Fed continues to balance economic growth with controlling inflation. However, despite these cuts, mortgage rates remain stubbornly high, hovering between 6.5% and 7%. Why? According to Lawrence Yun, chief economist for the National Association of Realtors, it's largely due to persistent consumer price inflation. While inflation has eased from its peak, it has not been fully contained, even ticking up slightly in recent months. Lenders need to account for future purchasing power loss when lending money over the long term, which keeps the mortgage rates elevated. Looking ahead to 2025, more rate cuts are likely as inflation is expected to calm down measurably. This could help mortgage rates trend modestly lower. Additionally, while multifamily housing starts have declined this year, the completion of projects started in prior years is adding significant supply to the market. This increase in inventory could cool rental prices, narrowing the gap between rental costs and mortgage rates. It's also worth noting that mortgage rates above 6% have been the norm for over 2 years now. While this may seem high compared to the last decade, it's below the 50-year historical average of 7.7%. Many consumers are adjusting to this new normal, especially with a strong job market and the demand for housing continuing to drive activity. So, what does this mean for buyers and sellers? Jobs and housing inventory will be key drivers for home sales moving forward. For buyers, it's about finding opportunities despite higher borrowing costs. And for sellers, pricing homes competitively in a market where affordability is top of mind. As always, staying informed is critical in navigating the real estate landscape. And that's where this podcast comes in. If you have questions about the Bay Area market or need advice tailored to your situation, feel free to reach out. I'm here to help. Thank you for tuning in to the Bay Area Real Estate Podcast. I am Harvinder Balu, and I hope today's episode gave you valuable insight to navigate real estate market with confidence. If you enjoyed this episode, be sure to subscribe, leave a review, and share it with someone who could benefit. For more helpful resources and real estate tips, visit my website at REALTORHarvinder.com. Until next time, stay informed, stay empowered, and I will see you in the next episode.